Good morning, everyone. If you would take a minute or so, please introduce yourselves, tell us where you're speaking from, and give us about 1 minute about what your company does, and also let us know what a good lead is for you. I'll introduce you according to how I see you on my screen. Our speaker for the week, James O'Hara, he'll be the last one that'll get introduced, and he'll tell you about himself and his organization. So with that, Mr. Nick Sullivan.
Well, hello, everyone. Nick Sullivan, Sullivan Business Solutions here in Raleigh, North Carolina, but can work across the country. We all know how important cash flow and profitability is for businesses. It's lifeblood. Owners are always looking to see ways to improve that. I help capture specialized tax incentives and cost reduction opportunities that 90% of businesses aren't aware. They can be benefited by these incentives, whether they're commercial property owners or hire employees or do research and development. These are specialized credits. We're happy to work with their tax professionals, and often they can be well into six figures, even for small to medium-sized companies. So if a business owner has 10 minutes, that's all it takes for my proprietary software to identify and capture or identify these benefits. If we see opportunities, I connect them to a team of experts. I partner with a national company. I can also help these business owners and then their employees with legal, and they get benefits from Legal Shield. A good referral is Main Street businesses, companies that you go to. You know, the local store, the local hotel, the car dealership. All those types of businesses can benefit from what I do. Again, it's Nick Sullivan, Sullivan Business Solutions.
Thank you, Nick. Mr. Gerald Cowan, please.
Good morning, everyone. Gerald L. Cowan, lawyer, near Indianapolis, Indiana, in a city called Noblesville. Place, it's like heaven to live. Small town, friendly people. I write wills, I write trusts, I write powers of attorney, living wills, healthcare appointments. A will will get monies where you want them to go. We usually go two choices deep at least, because we never know when one might walk out in front of a semi. I do powers of attorney where if a person owns property and they are in an accident or reach a certain age where they can't sign their name, a power of attorney can save thousands and thousands of dollars over creating a guardianship. I write living wills where people can state what they want done in the event their doctor determines that they're terminally ill, whether they want food and water. I write appointment of healthcare representatives where people can designate who they want to make healthcare decisions for them if they're unable to make them for themselves. I am honoring a 50% discount on estate planning for the next few weeks. COVID has taken its toll on me. People did not want to get together face to face. So y'all come, okay? Thank you.
Thank you, Gerald. Rhoda Israelov, please.
Good morning, all from Indianapolis, Indiana. My team and I write what you read when you go on our clients' website. And we want to show that they're in the now, in the know, and ready to do business. So we say it for you.
Thank you, Rhoda. John Vandersall.
Good morning. John Vandersall, residential real estate agent, Indianapolis, Indiana. I work for the FC Tucker Company, and I office out of the Keystone the Crossing branch. A good lead for me is, especially as we're crossing state lines here with Nick and the Carolinas, believe it or not, a good lead for me is someone out of town, out of state, looking to buy or sell. FC Tucker has a relocation department, and it's a referral, right? I pass the name and number to our relocation department. They reach out to qualified, seasoned agent, professional, full-time like myself in another city and state, and that real estate agent will give me a small piece of their commission collected upon the sale. Anyway, for all your real estate needs, talk to Tucker and call Vandersall.
Thank you. Yeah, I want the money. I get that. No problem, John. David Garrison, please.
I hadn't heard that rhyme before, John. That's a good rhyme.
No one in Indianapolis has heard that rhyme.
I'm Dave Garrison. I'm with Mutual of Omaha Mortgage, and I do reverse mortgages. So I help wealth advisors, real estate agents, sometimes CPAs and attorneys analyze and utilize housing wealth to either improve cash flow, reduce risk, improve liquidity, or purchase a home in their age 62 and better years. Dave Garrison, I'm down near Martinsville, Indiana, Mutual of Omaha Mortgage.
Thank you, David. Jim, I wish I was on a golf course shepherd.
I just have I hope I don't lose you all here. I just had service people arrive to bury my new cable into my house with, and they want to know what's out there in the front yard. And there's only about 52 flags right now. So I don't know, hope they don't cut us off, but I'm retired, old time CBN member. I won't say old time, a long time CBN member. Rhoda and I both go back to the origination of this group. Was in the graphic arts business, printing, and Keith helped bail me out of that one, and I'm appreciative of that. So I'm just delighted to be here. We've been vacationing a few weeks, so it's good to be back in Indy.
Thank you, Jim. And my name is Keith Rand. I own a company called First Quality Printing. I'm semi-retired. I mostly do consulting right now for acquisitions. Jim was one of my first ones, and bailout would be close to what it was. It was more like Jim was like helping me be smarter. So I always relied on Jim since then. I've done a few purchases since Jim. So with that, what I'd like to do now is thank all you guys for showing up today. And I'd like to reintroduce our speaker, Mr. James O'Hara. James, if you would, introduce yourself and your organization. You have the floor.
Wonderful. Thank you, Keith Rand. Thank you, Ms. Rhoda Israelov, for the great invitation to join your group. I did a little research. Rhoda did indicate to me the great history of this organization goes back. I think I used the term, it was either the Carter era or early in the Reagan era. You guys started meeting in the late 70s, early 80s. And I remember those years as well. So greetings from New Canaan, Connecticut. New Canaan, Connecticut is a suburb of New York City. We're in Fairfield County. A lot of people think of Fairfield County, Connecticut as New York's sixth borough, because before the pandemic, all of our sites were going south to New York City on the trains. This is a town of 20,000, and we had a 5-year waiting list to get a parking space for the Metro North commuter rail line. And within months of March of 2020, that waiting list has completely evaporated. So commuter parking is no longer an issue for the first selectman, for the mayor of this town. Since you folks are in Indiana, I'll briefly mention that if you heard of New Canaan, if you're Notre Dame fans, we sent our high school quarterback to South Bend last year. His name is Drew Pine, and he got in a couple of times as a pure freshman in relief of Ian Book. And apparently Drew Pine is going to be in the mix this year, potentially to be the starter. And if you're really old Notre Dame fans, sometimes when I go into town in Dunkin' Donuts, I see this tall, thin gentleman with a Notre Dame hat and a cup of Dunkin' Donuts. And it's Terry Hanratty, the quarterback of the 1966 National Championship team. He resides in this town. His son Connor played for Brian Kelly about 5 or 6 years ago. So Terry had COVID, and there was a big article on him, and he does a lot of walking around town, and he bounced back. But he's a Notre Dame legend. So those are two little tidbits from this town for South Bend. So thank you again. You know, I think my bio was distributed, but I have a long career in financial services, what I called institutional business development. I had a regulatory background originally. I worked for a couple of firms in the late 80s, early 90s that are no longer with us, Payne Weber, Dean Winter, Solomon Brothers. But in 1994, I actually joined the staff of the New York Stock Exchange, Inc. So back then, the New York Stock Exchange was very similar to a country club. It was membership owned. There was 1,366 seats. The floor had, I don't know, 4,000 or 5,000 people. They still were executing orders paper. I watched the transformation from 94 to 2005, was down there during September 11th. And then the exchange, as you know, today, it's the trading floor, it's all electronic. It looks more like a, like a studio for CNBC for Maria Bartiromo. But that was exciting times. I worked upstairs on the professional staff. There was about 1,400 employees, and I moved from market surveillance into client service, and then listings. And as I tell folks, that's where I really honed my meet and greet skills, because every day you met captains of industry. The one story I told this on an interview, and it probably dated me, but you met a lot of top-notch people. But one morning, I had a good hour and a half commute. The kids were young. I was running late. I got off the subway. I was bounding down Wall Street. I turned the corner onto Broad Street, and the security guard's like, "Whoa, big fella, stop!" And I stop, and then I see Nelson Mandela getting out of a car, going into the exchange for a South African gold mining listing. This was after he had left office. So those are the types of folks that you saw. So, but this morning, again, thank you for the opportunity. I thought I'd spend a few minutes to talk to you about this new acronym that I just learned about 13 months ago, which is called Earned Wage Access. So Earned Wage Access is a new trend in payroll, where hourly type workers can get immediate access to the wages that they've earned without waiting for that 2-week pay period. So we believe that financial technology and all of its innovation has not really arrived at America's payroll department. And not to say anything condescending about payroll, but I don't know, all in our careers, you probably remember if it was a mistake in your paycheck, you'd go down to payroll and there'd be somebody who'd be working there for a long time, and what would they say? They'd say, we'll fix this in the next pay cycle. If it's not fixed in the next pay cycle, it'll probably be fixed in the following pay cycle. So I'll get to Rellevate in a minute, but we believe there's a trend that when you finish working, if you're an hourly type worker, if you're making between 15 and $50 an hour, when you finish work on Friday at 5 o'clock, legally those wages are yours. To have to wait again for another week and a half or 2 weeks when our children and grandchildren are moving money instantly through these Venmo apps, it seems to be like a broken system. So there's this new trend called Earned Wage Access. And I often quote this KPMG white paper that came out, where they basically talked about the new program of Earned Wage Access companies, which my digital bank Rellevate is. But since this is a third-party independent consultant, I like to quote him. And KPMG said that the COVID-19 pandemic, as we all know, it's wreaked havoc in the US and around the world. And a lot of the damage has cascaded down to hourly workers and to the employees of the worst hit industries. KPMG is saying the most important action an organization can take is to allay some of their workers' financial stress. So this new method of paying employees is being adopted by a growing number of employers. And again, it offers immediate access to wages that they've earned without having to wait for the normal weekly or biweekly pay cycle. And there's many benefits to both the employee and to the employer. Hourly workers are experiencing severe cash flow, again, principally driven by the disconnect between their daily expenses and the old traditional pay cycles. Millions of employees today need immediate access to their cash, and unfortunately, the alternatives for them are less desirable. They go to oppressive payday lenders and check cash. Today, employers can go through employee-sponsored programs who offer earned wage access, where an employee can bridge the gap between their daily expenses and their biweekly pay cycle. Doing so would certainly help with morale, and it might even help employees go the extra mile in delivering their customer service functions. So that's a little bit on earned wage access. Today, a lot of the large retailers, I know Walmart and Burger King and Chili's and Target and McDonald's, Domino's, they have some type of earned wage access program. It's a crowded investment space. So with that, about 22 months ago, the former president of Western Union, who lives up here in Connecticut, named Stuart Stockdale, had finished up his last role, and he got together with a couple of his former colleagues, and they sat down and they brainstormed to come up with what they believe would be a great, the best in class digital banking services platform. So with that, Stuart Stockdale launched Rellevate. So Rellevate is a digital banking platform that offers earned wage access. Since Stuart Stockdale had a large following in the payments industry, he was the head of marketing for MasterCard. He actually worked for Conseco for a while when the GE executive Gary Wendt was running Conseco, which didn't turn out very well. And he worked for Simon Property. So when Stuart launched Rellevate, there's a great article in the American Banker that published it and said, Western Union alum starts digital banking for hourly workers. So this was a great article which talked about the launch of Rellevate. And then another thing that Stuart was able to do, he met with the folks from our state's venture capital arms. So most states have state funds dedicated to supporting emerging companies. So Connecticut Innovations, which is our venture arm, is a lead investor in Rellevate. And you know what venture capital folks are like. They probably turn down 9 out of every 10 proposals that come before them. So I joined Rellevate about 13 months ago, and I'm responsible for business development for the New England region. We are a national company, and we are an FDIC digital bank account. As you know, in banking, a lot of the brick and mortar branches are closing. So this is an FDIC $250,000 insured digital bank account geared for hourly workers. So we are selling this. I use the word selling, but we're selling this to employers as an optional benefit for their employees. However, we don't charge employers anything to offer Rellevate. The only thing that we ask for is that they support us in helping us publicize it internally to their organization. So we're calling on a large number of municipalities, of school bus companies. We launched with 2,000 Dunkin' Donuts. We launched with the bakeries of these Dunkin' Donuts. We're looking to talk to manufacturers, healthcare workers. There's thousands of certified nursing assistants, many of them who one of our features on the platform is you can send money to another country. So we, our website and everything is bilingual. All of our marketing materials is bilingual. We met with a Waveney Life Network Care Center right here in this town, and the woman said she heard that we can send money to other countries. She specifically said that a lot of their certified nursing assistants are natives of Jamaica and Haiti, and if you can send $100 to Haiti, that's a godsend. Unfortunately, Haiti's really struggled, and Jamaica as well. We're also sending money to Latin America, Mexico, Guatemala, places like that. So we went live last August. We've had some success. We have about 1,000 users, and the reason why we go to employers is because we need access to an employee's time and attendance. So if they could provide us with their time and attendance and wage information, Rellevate through their phone, an employee can access 50% of their wages in between pay periods. We're not a payroll company. We don't want to mess with any payroll deductions or any garnishments. Some people have IRS and divorce garnishments. So, but if you're working on Wednesday and you don't get paid till Friday, and you go outside and your car doesn't start, or you see a flash sale on an airline, you want to book that flight, and a couple of times in my presentations, I used the example that, God forbid, you have to buy your kid a new pair of hockey skates, which I told somebody I paid $550 for my son, and people were aghast, so they don't. So it depends on your example. But if your car doesn't start and you can't get to work, you could go onto the phone and you can have your pay any day wages. So you'll have your regular checking account if you only have $82 in there, and you'll have half of your wages earned that you can move over. It's not a loan. These are earned wage access. They're really just advances, and it costs $3 like an ATM transaction to access that. There's no monthly fee for the digital checking account. It's kind of like use it or we use it as pay as you go. If you don't need it, you don't have to pay anything for it, but it's there certainly for an emergency. So yeah, we don't like payday lenders, and we don't like check cashers. So one story that was told is we were down in South Jersey at a commercial bakery. We have access to 2,000 Dunkin' Donuts, but they asked us to work with the bakery first to kind of earn our stripes, and then they would open up the Dunkin' Donuts franchises for us. And there was an immigrant from Bangladesh who would bring home about $1,150 every 2 weeks. And on Friday was his day off. He would drive to the bakery, pick up his paper check, and he would go to a check casher, and they would charge him 7 or 8% principal of his check. And they knew that those funds were good. It came from a local commercial bakery. So, and then he would take his money and put it on a prepaid debit card, and that's how he would pay his bills. Well, when he got rid of his paper check and he got direct deposit and opened up his Rellevate account, and to me, it was almost like part of his assimilation. There are about 25 million unbanked Americans. A lot of them are immigrants, and they don't trust our banking system yet, and they're still on paper checks. And as we all know, every day people are using less and less cash. So that's relevant. I thought I'd pause there, give anybody an opportunity for any questions. But again, we're offering this to employers. We've had some success. We put out a white paper ourselves. We work with the employers. We have marketing materials. We help. We ask the employers really just to kind of a B2B transaction, business to business. But once they sign up and sign our client service agreement, then we have to work with HR and payroll. We have to educate, the employees. So this is really built for scale. We try and use, maybe 100 employees as a minimum. Our business model believes anywhere from maybe 25 to 30% of the eligible employees would consider opening up a Rellevate account. We do ask them to change their direct deposit, which is a little bit of an ask, but it will, that will provide them the opportunity to achieve the earned wage access. So I'll pause there if that's a good opportunity.
Hey, go ahead, Nick. Does somebody have their hand?
Yes. So the revenue comes from that $3 transaction to your company?
Correct. Yeah. So that's why we're looking to build this to get, that hundreds of thousands of users. But yeah, we started off thinking about doing $9.95 a month. And then, this is a crowded space. I mean, I will share with you that there's a couple of companies called PayActive, Daily Pay, Chime. They all have multiple billion-dollar valuations, but they don't charge. So we did pivot very quickly, and we got rid of the monthly fee. So it's, I had a presentation, but I thought it'd be more interactive just to, I could log on and show you my account, but I don't have to pay any day. I just have my regular money in there just to get used to using it.
I have a question. It's a real practical question. In your example, we have an employee and he wants to get paid now, a portion of his wages, which means that all of the garnishments and all of the tax, whatever is coming off, health insurance, whatever deductions are going to kill the second paycheck.
Well, that's why we limit it to 50%, because we don't want anybody to be in a position where they're not taking home anything, because you're right, then they're just back in the hole again. But these transactions are just limited to the next pay cycle. So if you're taking home $1,150 or $1,400, hopefully you only advanced your, $100 before payday is a godsend, and then when you get paid, so, we've monitored a few accounts. We've seen some people that are using it excessively, but we're still nimble because we're still, in the startup mode. But no, we never want to be in a position where you take home nothing. That would be really stressful. So we try and limit it. You're at least going to get something, and we sweep out on payday, your advance. But it's sure as heck better than a 300, 400% payday loan,
The other question I have is my son manages a liquor store. So the employees are hourly wage, but the ones who are working delivery also get tips, but they get them on their paycheck.
Interesting.
So in other words, it's not a regular amount. Could this still work?
So what we've done, asking employers, we haven't we've been deemed we've done a transaction with Kronos, one of the payday providers, and we're on their. They vetted us for over 6 months. We're on their platform as approved third-party providers, I guess. And we, so if we can't get accurately daily time and attendance and wage information, we'll take historical. We'll take the last maybe month or 6 weeks, and we'll see what somebody was making, what their tips would be. Maybe they're more around Christmas, and we would, through our algorithm and artificial intelligence, we would make a determination to provide 50% of their wages. We don't want to go above 50, although some people have already asked us for that. But we're trying to be on the side of responsible lending, financial wellness. We're actually socially conscious company. We're trying to be. So we're trying to stay away from the bad actors.
Yeah, I had a comment about that because obviously being a member of a minority community, my first thought was, is this another form of payday loans? And you kind of made that kind of clear to me. But what's your current penetration rate? If you knock on 100 doors, how many employers take you? And then I'm still a little bit confused about what is my benefit as an employee? Is this like you're converting me to access that a gig worker would have? Because gig workers get their money right now, today.
Exactly. Yep.
Is that what we're looking at potentially?
Correct. And Keith, to your point, you're right. I mean, this is one of those terms where, if you hadn't heard of earned wage access, it's one of those things you hear about, and a week or two later, you probably pick up the paper or you read something. But the gig economy is really growing. So we, as far as the advantages, there is you do recognize, you hear that there's a labor shortage. I saw an article where McDonald's had a sign up that said they'd give you a free iPhone if you take the job. Some companies are giving you $50 just to interview. So what we've learned is that every Dunkin' Donuts, and this is probably true for a lot of fast food restaurants, that they have a cash kitty. And there's times where employees need $20 to put $10 in their gas tank to go home and then to come back the next day for their shift. So we're looking at it. This is anyone who opens up a Rellevate account, it is a third-party arm's distance relationship. So the employer doesn't look at when someone might be taking an earned wage access advance. So we just think of it as financial wellness. It cuts down on retention, financial stress. As far as penetration, I will share with you what we did here. Since Connecticut is our home state, we had the opportunity to hire a lobbyist, and it's a retired former Speaker of the House, and his partner is the son of a former governor. We had a governor named Jody Rell. So these lobbyists, I guess I've learned, for retired politicians, their Rolodex is that's all they really have, is their relationships and their Rolodex. So through the lobbyist who's been opening up doors with a lot of cities, Connecticut does have, we were, a real airspace, manufacturing hub. We still are, Igor Sikorsky invented the helicopter up in Stratford. So we have a good success rate with some of the cities, the city of New London, the city of New Britain, where Stanley Works and Black & Decker is located, with the city of Stratford, where Sikorsky makes those Black Hawk helicopters. We're trying to get in to see this. We have a big submarine base up in New London, where the the Coast Guard Academy is. President Biden just spoke there last week at graduation. There's thousands of electric boat welders that are, earning good wages. But no, I do make a lot of cold calls, that don't necessarily get returned. A warm intro, I'm learning, is probably the best intro. It does take, you didn't need to really connect with, senior management in order for them to say, this makes sense. Help our workers. We met with a mayor who was a former police chief of the city, and he all of a sudden he just had an aha moment where he said, "Gosh, I feel like I'm out of touch. I've had a pretty decent paycheck and I have a pension, and I understand that this could help employers." The statistics are frightening. I mean, they say even 25% of people who are making six figures, are still living paycheck to paycheck. And some companies like Procter and Gamble, they pay their top executives, monthly. But my wife was getting paid monthly as a marketing director, and we remember it was feast or famine. We found a school district in Colorado who attended a seminar where my boss spoke, and he asked a lot of questions, and she came up to him and she said, I'm in this Adams 12 Denver suburb. We have 5,000 employees. We cannot hire custodians, paraprofessionals, and bus drivers because we get paid once a month, and by the 18th day of the month, they're kind of sucking wind. I mean, everybody's got different buckets of money, but who wants to be scrambling, every month just to get to get some money. So yeah, this is a new trend. There's a lot of competition. We're in a competitive space, but we believe we're one of the few companies, I think, that's selling it to employers, and we're learning a lot as we go. We our investor round went pretty well. The investors were happy. A lot of them came back in. We've only raised about $1.5 million. I mean, there's competitors out there that are have $50 million advertising campaign.
Okay. Okay. Anybody else got any questions? Because I've got a couple more questions. Gerald Cowan, please.
And I want to make sure I understand this. I apologize. I got a telephone call from my wife, and how when that happens, you better take the call if you want to stay married. But anyway, exactly. I understand this correctly. You take the pay period that the person is being paid, whether it's weekly, monthly, or what have you, and one time during the pay period, when you're at least halfway through the pay period, a person can draw down money. And I'm going to ask you how much in a minute. They draw down money, and then they can. That's the only thing. They cannot draw down any more that pay period. Is that correct, or am I even close?
No, you're close, Gerald. They could draw down as many times as they like until they hit 50% of their gross wages.
Okay, good.
So they can't. We've had people use it more than once. We're trying to. So it's $3 an earned wage access withdrawal, through the debit card.
That was a wise.
We are
move.
part of the All Point Network. We believe that each account will generate about $12 to $14 a month in fees for our company. Again, as opposed to a payday lender or a check casher that's going to gouge the hourly work.
Pardon me. You're switching from $9.95 to $3 each time. I thought that's a terrific idea, because when they receive their money, they're not concerned about the $3. But if they see that $9.95 come out every month, it's like sticking them with a dagger. So you guys are off to a really smart approach here on this thing. I really like it. I mean, I wish I had a paycheck I could draw down on, but unfortunately, I have to get paid one client at a time.
Understood. No, thanks for your comments, Gerald. Yeah. I think we're in a good space. I mean, we believe in 5 years, the 2-week pay period may not be around. Like you said, these gig workers, Uber, some of our ads are, work today, get paid tonight. I mean, that's a little glitchy, but no, your wages will access. And if you don't need them, then on payday, you get your full paycheck.
I think, for a lot of us who never had to worry, I had a contract with the state of Indiana and the city of Indianapolis, and I had targeted employees that I had to hire. And
right.
and I know this sounds crazy, but if they could have got paid by the hour, because literally for certain targeted employees, not all, the access to money, I mean, that's a day-to-day struggle for them. And so that's why, like, when you first started talking, I went, man, is this another payday loan? Because that payday loan thing, I had several employees who ended up getting garnished, and that just blew my mind. Here in the state of Indiana, we had a period where you could not get more than 36% return. So payday loans, went underground. And so something like what you're offering, yes, it's expensive, but if you need that money, you pay it no matter what the cost. And that's what I learned, is that these particularly low earning employees, are ones that are more desperate. They'll pay. They don't care. They'll pay for that money.
Right.
And I just thought, this is terrible. This is terrible. So this is an interesting.
We believe the big banks don't cater to hourly type workers. The big banks are really geared towards, the affluent, so this is a huge marketplace, that we're working in. There's been, the Biden administration is very friendly towards, every bank you hear about. You pick up the paper and they all talking about committing funds to helping, small businesses and stuff. I think we're in a good spot. The trend is obviously digital. The pandemic has only exacerbated the need. The example that I've used is, I don't know if you've seen some of these food banks that during the pandemic, but the governor of Connecticut is, Ned Lamont, is very wealthy. He's from Greenwich. His wife was actually a very successful private equity investor. So Ned was at the food bank helping out, and he couldn't, and the media was filming him, and his lieutenant governor was next to him, Susan Bisowitz. And he started commenting on the vehicles that were pulling up to the food bank. First, he kept saying, oh my God, these cars don't stop coming. And then he starts going, wait a minute, that's a BMW SUV. That's a Mercedes GL. And then someone pulled up in a Humvee, which is like, I don't know, $80,000 car. And the governor was filmed. So he was blown away at the type of people that were pulling up, at the food banks. And I saw on TV in Dallas, there was about 8 lanes. It took 4 hours. And so Warren Buffett used to say, you don't know who's skinny dipping until the tide goes out. A lot of people, millions of Americans live paycheck, and the more you make, sometimes, the more you spend. So, there's certainly a need for it. It's an education process. It's tricky. Not everybody wants to, and we've had onboarding sessions in the school bus company. And, a lot of people like to take a pamphlet, go home, and maybe sign up on their own. But we're trying to, it was definitely geared, our CEO does have a passion for helping hourly workers. He wanted to do this at Western Union, and he kind of never got around to it. And it is a growing trend being offered to more and more organizations.
So explain to me, and that's the other piece, explain to me the exact process for the onboarding. Because, when I first heard this term, earned wage access, I said mouthful. What the hell does this thing mean, right? So,
it's a euphemism. Yeah.
How do you get it from, as a manager, as an owner? I get it now that you've explained it. How do I get that down to the employees so that they can get excited about that thing?
Yeah, so this is an example. So I was up in New Britain in the municipal town hall of New Britain, Connecticut. Again, Stanley Works and Black & Decker is a 50,000 employee company. So we'll put these, posters up. And this is the city of New Britain's logo. And, you have a QR code here. So basically, we shared with the employees that the mayor of New Britain, Connecticut, who's up for re-election, put out a press release, and she said she cares about her workers and that she's offering Rellevate to their employees. So really, you just have to fill out. You have to log online and sign up for the account online, and then you have to change your direct deposit. And then within a week or two, you'll get your Visa debit card in the mail. And then once we get your time and attendance and wage information, you'll see right on the phone your pay any day wages will be available there. but it's all digital. I mean, even that kid from Bangladesh who didn't speak great English, he knew how to use his iPhone, and he's been using his account. We've been monitoring his account, and sometimes they're taking out withdrawals, multiple ones per day. You know, it's almost to the point where we're trying to tell him, he's got to slow down a little bit. So yeah, it's an optional employee benefit. A lot of people said to us, I hope this isn't mandatory. I said, no, it's not mandatory. But it's there if you need it.
You charge the employer nothing?
Correct. Yeah.
Well, people didn't think Wrigley could make money on chewing gum, but they have. So you get enough of
and that's helped us circumvent the request for proposals. Because we're not asking for 25 or 50 grand for software or anything. It's it's zero cost to the employer, which you think my sales pipeline would be overflowing, but there's an education process, and plus HR people are trying to get their employees back to work. They're overwhelmed. This was something you could easily put on the back burner. The most success we've had is when if a mayor or a CEO or a CFO or the owner, I met with a gentleman last week that owns 50 McDonald's, and he understands they can't hire people. He's hoping that these stimulus checks stop going out because a lot of people, they say, are staying home. I think there's a couple more rounds coming. But yeah, we're looking at it as an employee wellness tool.
Well, this is a really interesting conversation and a really interesting area. Have you guys had any penetration in the restaurant business?
Let's see. Well, restaurants, similar to what Rhoda had said, a lot of restaurants employees work on tips as well. So their actual wages are not as strong as someone who works, in a manufacturing job or a teacher or a bus driver. But I do hear more and more waiters are getting their tips on plastic. They're not going home and counting the singles like they used to, in the old days. But we're talking to the state of Connecticut has actually made some good introductions for us. So we're talking to a couple of restaurants, but we're really doing well with Dunkin' Donuts. For some reason, that really seems to be a good fit for it, And success begets success. I mean, this is going to be a big business on referrals, press releases and publicity. And I'm pretty active on LinkedIn. I'm always putting stuff out there. There's a lot of I highlight other articles about earned wage access and paycheck to paycheck, like you said, it's a big issue in America. And we met with one town, and the HR woman said, I went into the post office to mail some letters at lunch, and I couldn't believe it. I saw one or two of my employees in there, and they were getting postal money orders or something, and it highlighted to her that there's certainly a need for them.
So are you guys thinking about doing, I know you said you're going to do money that you can send overseas.
Right.
What about other support services that an employee might want to have, like pay my electric bill or all that? Or is that just outside of the parameter of what you guys are thinking?
Well, right now we have, so we do offer you earnings credit, which is like interest. So Bank of America offers, 37 basis points, 0.37 1%. So we're competitive in our interest. We have the Visa debit card with 2 free ATM uses per month. We do have the pay any day is the advance, and then we do have bill pay and instant bill pay. So we are going to go. We have the ACH 2-day bill pay, but we're I think in the third quarter we're going to have the actual instant send money. So we use, my cable bill, I have probably too many TVs in the house, but my cable bill is like $300 a month. It's got my internet and phone and got 4 or 5 TVs here. But, if I miss that bill, next thing you know, I owe $596 for cable. And, if your cable gets cut off these days, your kids can't do Zoom calls for school, and I wouldn't be here. And then you got your mobile phone and everything else. But no, we're doing bill pay. We're doing send money home. They're all coming on in the next quarter or so. So yeah, we have a 2-pager, that we normally use for our marketing purposes, and Yeah, we're getting some traction. I mean, there's about 6 or 7 business development folks around the country, and we have our weekly calls, and we're doing pretty good in Connecticut. But we also, we're starting to hire more. The pandemic did slow us down. It certainly, it probably helped us in some way, but it's an easy thing to put off. So the HR folks are, Connecticut's got a couple of Indian casinos, and I connected with the woman up there, and she said, "This sounds really interesting, but I got to rehire 3,000 workers before we chat with you guys."
I got a question.
Sure, Dave.
I know you probably said this earlier, but I didn't sink in the first time. So I heard you say that you have to integrate to the company's payroll system. But how does the money flow? I mean, is it really a loan from you all? Is that?
Well, we don't call it a loan because to us a loan is
an advance.
Dirty word. Yeah, we call it an advance.
Okay.
I call it I know Keith said it was a mouthful. I actually sometimes Keith refer to it as instead of earned wages, I call it early wages.
Yeah.
So we have a warehouse line with a bank. So we're telling employers that we're not touching payroll. We're not touching any of the payroll processes.
Yeah.
We can get a connection to the time, wage, and attendance of just the people that sign up for Rellevate. So we have a warehouse line with a bank, and we're providing the advance, but it's only for 2 weeks. So we square up every pay cycle, and then you start fresh.
Yeah, I mean, and $3 per use, you said, right? I mean, if it's a fairly large use of funds, is the $3 even covering your cost of money in that period, or it has to be?
Yeah, I mean, we I think we're generating, like I said, we expect to generate. One of the reasons why we got rid of the $9.95 is because we're going to get it at the end of the month in $3, price.
Yeah.
So we're generating $12 to $14, maybe $16 an account. Yeah, I mean, I'm not the CFO, but I'll check with them.
Yeah.
But that's a good thought.
Yeah.
Okay. Anyone else have any additional questions for James? I'm always interested in new technology and new ways to do things. And this issue about money targeted to low wage earning consumers, if you've never dealt with them before, like most of us are professionals, we haven't had to deal in many cases. Yeah. This is like a real deal. And it's kind of interesting when you hear people like you or have this discussion at the top end, because all I can think about is those employees that I had that went like, "Mr. Rand, can I get paid today?" And it's like, no, no, you cannot get paid. Yeah. My only concern is the education process. In many cases, they don't get that there's a connection, that you've already spent that money. It's not going to be there. And it's like, well, I'll catch up. And they never do. That was my issue with payday loans. So, that's my spiel there. So, but
if you Google earned wage access, you don't have to Google Rellevate, but just Google EWA, you'll be surprised what you find. There's all types of studies and white papers. Like I said, this KPMG piece I send out is fascinating. I mean, you would have thought that we paid them on the side to write this thing, because it says, the article, and I could send it to anybody who's interested. It says, "Attention payroll leaders, COVID-19 spurs surge of earned wage access programs, new program benefits companies and their employees." And then it goes on, and it mentions our competitors, but some of our competitors have $6 and $8 billion valuations. I told our CEO, we got a long way. We don't need to get to 6 or 8 billion. There's only 15 of us. We need to get to 100 million and then 200 million and go from there. But that's how. But no, we have to grow the subscribers, and that's how. We have about 1,000 users now, which is pretty good. We need to penetrate, our account, the people that are signing up. The onboarding we've learned it's a little cumbersome. I used to say it was a lot of blocking and tackling, and now I'm learning it's more like hand-to-hand combat. You really have to get people, and changing direct deposit is not easy. That's a big ask, but once you do it, you can relieves a little bit of financial stress, and that's the goal.
All right.
James,
Go ahead, Rhoda.
we have a member of this group who is not here today. She
Okay.
is from Columbus, Ohio, and she runs a service that I think may be interesting to you, to do research for people who are trying to sell something new. So she does the research about the prospects
Okay.
and phone
Interesting.
calling, and it's called ASB Business Services.
Okay.
I'm going to make an email introduction of the two of you, so you'll
That'd be
know that, you know, what that's about, because it sounds as if you need to know who's out there, you know,
Correct.
around the country that could use this service.
Sure. Yeah, we have our chief technology officer is in Columbus, Ohio. He's a big Ohio State fan. We're scattered around the country. We have a guy in Florida, in Greenville, South Carolina. We have a couple up in New Hampshire. We have a guy in Jersey, and we have 3 of us are here in Connecticut. So we're going to be based in Stamford, Connecticut, which is a financial services hub. No, that'd be great. Yeah, no, I mean, you know, and thank you. You know, Rhoda and I met on a Zoom call, and it's fascinating, you know, I'm amazed at Zoom. I'm hoping it doesn't go away. I mean, it's good. I've gotten out and had some lunches with some of these mayors, which has been great because it's good to get out. But Zoom is amazing. You know, some of the networking I was doing I wasn't reaching the right targets. You know, because like I said, I'm trying to reach employers, you know, that have a couple of hundred of workers. You know, this isn't for the local pizzeria or something like that. It's it's built to scale, so we gotta scale it up.
All right. Well, thank you so much. Hey, it's been this is why we get together, because you know, this is a new area, and it'll be really, really interesting. It's going to be kind of challenging on your end, but appreciate all you guys showing up. I will be speaking to you guys next week. Jim, you're always invited back for, you know, a few times if you get a minute.
Right.
And you want to get up in the morning. Don't be like me and don't want to get up. So with that, you guys, I'll see you guys next week. Thank you so much. Bye-bye.
Thank you, Keith. Thanks, Rhoda. Great meeting everybody. Thanks for your questions and interest.
Good to meet you.
Okay, Keith. Thanks, Rhoda.